Welcome to Seeking Alpha, Alpha Talks Editors Roundtable. What moved the markets this week? The week ending Friday, April 16, 2021. A very positive week for stocks and for risk assets. We had record highs for the Dow and I believe S&P. The Dow index broke through the 34,000 barrier for the first time, first ever close above 34,000. And a very good week, of course, for Coinbase, which had its IPO, which is apparently, according to who you talk to, maybe not an IPO, strictly speaking, but whatever. They're public now, and that stock did very well on its first day of trading. And more recently, now today, on Friday, we have Dogecoin doing very well. I don't know what Dogecoin is. I don't know how to pronounce it. Maybe my colleagues can shed some light on it. Let me introduce them now. In no particular order, Brad Olison, VP of News, Kim Khan, Senior News Editor, Stephen Alfer, Managing Editor of Breaking News. I am your host and moderator, Nathaniel E. Baker, Senior Editor of Strategic Contributors. Let's kick it off with Kim, as we usually do, to give us the big picture lay of the land and get us caught up on what moved markets this week.
This week was kind of a show me week for economic data, in as much as investors who had bid up the markets to record highs wanted to see some evidence that the U.S. economy is gaining traction, recovering. And I think those numbers pretty much came through. We had CPI up at its biggest monthly gain since 2012, but it wasn't too much of a pop in inflation to spook the market that day. We had retail sales for March up nearly 10%, but I actually think what really got the market going yesterday and has kind of cemented the gains for the week for stocks is jobless claims, which dropped substantially in the initial claims to below 600,000. Again, they had been up above 700,000 for a couple of weeks. And also, if you looked at applications for all benefits and assistance, that includes the pandemic unemployment assistance program, that dropped by 1.2 million. And so that's a sizable drop in the number of people applying for benefits. It's indicating some appetite and for people getting back into the job market. So I think that helped a lot. And the market basically Thursday's gains kind of have it riding in to look like it's gonna, all three major averages will close higher.
And we had earnings season kickoff with positive reports and beats all around. Just about every financial, at least that I saw, beat on EPS and also on revenues. Which interestingly didn't really move things all that much, but like you said, we are higher. So then, Brad, take us through the winners and losers.
Right. So as Kim alluded to, obviously a bumper week for economic data. As you mentioned, retail sales, ISM, jobless claims, and the banks were definitely supportive. Some of the results were definitely indicative of a stronger economy. I would like to add, though, that even though we talk about the market broadly being up, it was more of a defensive week following the shocker from J&J about their shot potentially leading to blood clots. And so I think that had a dampening effect midweek, and you did see some of the risk off shift a little bit. Work from home names, the old ones that we used to talk about in this program rather regularly, like Zoom and Fastly and DocuSign, Sword. And even though that J&J shot is only a small percentage of the vaccines, I think what's notable to take away is that in polling post that suspension, people have a deeper distrust of the vaccines than they did before. And so that could probably explain why the market sold off despite just a small penetration on the vaccine part. And then with that, you saw airlines pull back, Delta, American Air, and cruise lines, Norwegian Cruise Line, RCL. And then some of the other big losers were the week were still the ramifications from the Archegos Capital blow up. You had Discovery was, I think, one of the biggest losers in the S&P, and Viacom as well. That Viacom chart, by the way, is just incredible. I encourage everyone who's listening and watching to look at the one-year chart, just tripling in a few months and then losing 60% in just a few days. As some of our readers will know, Morgan Stanley disclosed a $900 impact from that Archegos Capital blow up. Credit Suisse, I think, had a $4.7 billion charge. So the ramifications are still looming large from that hedge fund blow up. But I think with the J&J combined with some of the, what we don't talk about often on this program is geopolitical risks, with the exception of our guest last week. Mind you, new sanctions on Russia also probably having a dampening effect, just from a defensive positioning standpoint for stocks broadly.
Yeah, although on the J&J news, I can't even remember what day it was, if it was Tuesday or Wednesday, but the market seemed to shrug that off pretty quickly. And J&J shares have almost recovered to where
they weren't impacted at all, right?
I mean, they were little, but not all that much. So it just speaks to maybe how resilient this market is. But also we did have some better news, like Pfizer came in and said they can deliver these vaccines to make up for J&J's shortfall and stuff, which I'm sure helped. Anyway, on that, Stephen Alfer, over to you. What were you watching this week?
Well, earnings. If it's the start of earnings season, it's going to be bank stocks are generally among the first reporters, and as you pointed out, they all beat, but they generally always all beat unless something really goes bad, like it did in first quarter last year. So the beats really are not news, and stocks should not necessarily rise on that news, especially when they've had such big rallies going into earnings. So investment banking was gangbusters, as anybody who's been following the news with the IPOs, the SPACs, that's all, big investment banking fees. And also there was the reserve release. If you remember Q1 a year ago, right, they all had to add to reserves massively. And now those reserves the losses aren't as bad as feared, so they're able to release reserves as needed to, kind of crank the earnings up. But importantly, the headwinds are low interest rates. I think pretty sure almost all at least the consumer-focused banks, all mentioned that margins aren't improving in that area, and the outlook wasn't great going forward in that area. So that maybe that was responsible a little bit for some of the less enthusiastic reaction by the market.
Yeah, very interesting. What else? What do you make of the IPO this week, or whatever it was, the Coinbase thing, and the rally we saw there?
My biggest take is there's going to be a lot more crypto-related IPOs this year. Seeing the reception and the valuation that Coinbase got, there's going to be other exchanges before year end that are probably going to be public. Kraken, I'm not exactly sure how it's pronounced. Binance, maybe that's more overseas. FTX is another little player overseas. Gemini, which is the Winklevi's company. My guess is they IPO'd before end. Mike Novogratz's Galaxy Digital, they just hired an ex-Goldman guy as their chairman. So they're probably prepping an IPO. They're not an exchange per se. He's trying to be like a crypto investment bank. So you're going to see, Wall Street always finds a way to, kind of soak up the demand, and there's a lot of demand for that right now.
All right, let's move on to the segment of the show where we talk about our favorite articles, Seeking Alpha news coverage, or other things that we've worked on or seen and covered, perhaps edited. And why don't we start with Kim?
Well, I'm going to bring out a name we haven't heard in a little while, Roaring Kitty, who is the big bull on GameStop on the Wall Street Bets board, and was he was in front of the House Financial Service Committee being questioned after the squeeze. And today his options contracts on GameStop are expiring. And he looks set to rake in at current prices around $7 million on that trade if he sells them or lets them expire. He, at the beginning of the year, bought 500 options contracts with a $12 strike price. Stock is now around $155. So he paid about $10,000 for those options. So a nice little haul for him today from sticking with his bullish GameStop theme.
Brad, over to you. What about your favorite stories?
So, you kind of alluded to it earlier today, earlier in this program call, and it was the Coinbase story for me. I think it was interesting to watch. Earlier in the week, there's this crypto exchange called FTX in Germany, which had been pricing the expected opening from this direct listing. And I think they estimated that it close to $463 a share. That was well above the $250 reference price that NASDAQ and Goldman put together ahead of Coinbase's actual opening. The price on the day actually rose as high as, I think, $430 or so. But obviously that story has just captivated the market with opening up 50%, I think, above its reference price when all is said and done, around 130 or so. So Coinbase obviously going to be a story for some time, as Steve alluded to. I think what we mentioned last week when I kind of previewed this was Robinhood is about to get into the space and try to double down on some of those trading aspects of crypto. There's not a whole lot of barriers to entry from what I'm gathering, although a lot on the street have come out and initiated on Coinbase and have some rather high hopes. We talked about D.A. Davidson's $440 price target last week, and I think Moffett-Nathanson one-upped them with a $600 price target, if I'm not mistaken. So a lot of optimism for this company going forward, especially as the interest in Bitcoin continues to rise.
My favorite story was, and I think Kim might have written it up, was the exchange between Elon Musk and Kathy Wood of ARK Investments. Elon kind of tweeted out, "Hey, do you think the S&P 500 is too high relative to GDP?" And she came back with a very kind of detailed description of why she doesn't think it's too high in relation to GDP. Basically going back to pre-World War I, late 1800s, early 1900s, she said the major index had a much higher proportion of GDP back then because it was a time of great technological advancement. And she says the technological advancement now is wildly greater than what was going on then. So there's really good reasons, mainly digital transformation, for the S&P and to be trading that highs. So it was an interesting conversation, and it just goes to show you the interesting times we live in, where two, for better or worse, giants of their industries kind of having this open, frank discussion for everybody to see there on Twitter. It's great stuff.
All right. Well, that wraps up our show for this week. Thank you all for listening or watching, as the case may be. On that, if you were watching and want to listen to the full effect audio, you get that on the Wall Street Breakfast podcast account, which you can get through any podcasting software just about. And that airs around 6:30 on Saturday morning. With that, we thank you for watching and look forward to speaking to you again next week.